Hello, this is Leroy Meadows, and in this session, we're going to do a few exercises here with regards to managerial accounting and accounting for costs. So this first exercise, exercise 14-6, a car manufacturer incurs the following costs. Classify each cost as either a product or period cost. If a product cost, classify it as direct materials, direct labor, or factory overhead. If a period cost, classify it as a selling expense or a general and administrative expense. Place an X in the correct column for each cost. So let's take a look at the first one, factory electricity. Factory electricity, is that direct materials or labor costs? No, but it is factory overhead. Why is it factory overhead? Because it tells us specifically that it is electricity for the factory. In fact, let me just do this real quick. There we go. What about advertising costs? Let's look at the second one, advertising costs. Is this a product cost or a period cost? Well, it's a period cost because it's not directly supporting the factory or production. It's not supporting production. It's supporting the product or the company or the brand. So now we know it's a period cost. Is it selling expense or general and administrative expense? This would be, let's see, a selling expense because of the fact that we're advertising it in order to sell it. Depreciation on factory machine. And here's a clue, just like the first one here. If it says something for factory, then it's probably going to be a product cost more than likely. So depreciation on factory machine. It's not direct materials, it's not direct labor, because remember we said that indirect depreciation was factory overhead. It's an indirect cost. So depreciation on factory equipment will be factory overhead. Now remember our cost object. A car manufacturer incurs the following costs. So we're looking at a car manufacturer here. So let's take a look at number 4, batteries for electric cars. So if we're making electric cars, we know it's going to be a product cost because that's what we make. Is it going to be direct materials, direct labor, or factory overhead? Well, it's probably going to be direct materials. Why? Because that's a cost that can be effectively traced to each cost object, or in this case, each car that we're making. Number 5, office supplies used. What type of situation would this be? If we're talking about and we're given the term office, just like we were given the term factory in number 3 and number 1, that gives us a clue that it's a product cost. If it's anything related to office, then it's probably going to be a period cost. So office supplies used is going to be a period cost. Now, is it a selling expense or a general and administrative expense? Well, it's going to be a general and administrative expense. Why? Because it's not related to the selling of the car. Wages to assembly workers. This should be a giveaway here because the assembly workers are the ones putting together the car itself. So the assembly workers, that should give you a direct thing that not only is a product cost, but the assembly workers are going to be considered direct labor. Now, what about salesperson's commission? Number 7, salesperson's commission. Well, if they're involved in sales, it's not a product cost, but it will be in selling expense. Why? Because that's part of the selling. That's part of the cost of selling the cars. The steel for the cars. Well, we know because we're making cars, it's a product cost. So we have our choice of direct materials, direct labor, and factory overhead. In this case, it would most likely be a direct material. Why? Because we can trace the amount of steel to each car. You have a steel hood, You may have a steel frame and other steel parts in there. Now, what about depreciation on office equipment? Well, here we're given a heads up. It's office equipment, so it's not a product cost. It's a period cost. So, is it related to selling? No, it's a general and administrative expense. So, we're going to put a box right in there. And then, what about leather for car seats? The leather for car seats, because because we do make cars, it is a product cost, and it's going to be direct materials. So this gives you an idea of how we would classify different things with related to product costs or period costs, and then more specifically, what type of product cost or what type of period cost. Now, let's look at exercise 14-13. Use the following selected account balances of Del Rey Manufacturing to prepare a schedule of cost of goods manufactured for the year ended December 31st. Okay, so how do we calculate the cost of goods manufactured? We figured out the amount of direct materials used, amount of direct labor incurred, and the amount of factory overhead. That'll give us our total cost of manufacturing. Then we add that to our beginning work in process to get the total cost of work in process. Then we subtract out our ending inventory to get us our cost of goods manufactured. So the first thing I want to do is look at direct materials. So let's take a look here. And this is the information here on the right associated with our exercise here. So let's take a look at direct materials. And the first thing we need to do is figure out raw materials. Now, in order to do that, I'm going to have to figure out how much materials I'm used. Did it give me how much materials I used here? No, I'm only given beginning balance, the purchases, and the ending balance. So I'm going to need to compute that. So we'll start with, and here's how we would do it, raw materials, inventory, beginning, and how much? $37,000. That's what we're told right here. Now, how much did I purchase? Well, I purchased $175,600. So I'm going to add in my raw materials purchases of $175,600. And let me go ahead and format this real quick. I thought I'd done that beforehand and I didn't. So let me go ahead and do that now. And I'll format the rest of this later. So so adding together my beginning inventory plus my purchases gives me raw materials available for use. And that is going to simply be the sum total of these two. So if I take $37,000, my beginning inventory, plus $175,600, that gives me a total of what? $212,600. So I'll put that there. So that's my raw materials available for use. Yep. Let me get rid of that annoying comma there. Now from that, I want to subtract out my ending inventory. So less raw materials inventory ending. And how much is my ending inventory? 42,700. I see that right here in the chart right there. So 42,700. And this, and this is my direct materials used. And so when I take off my total raw materials available for use and subtract that from my raw materials ending inventory, I am given what? 212,600 minus 42,700. And that should give me $169,900. So $169,900. Yep. And I want to put that there. Okay. So now let's take a look at our direct labor. Now, there is no T account for direct labor, like there would be for materials inventory or work in process inventory or factory overhead. Why? Because direct labor is charged as we incur it. So there is no holding of balances or anything like that. So my direct labor is how much? Well, we're told right here, $225,000. So $225,000. And now I'm going to have my factory overhead. And let me move that over just a little bit. So my factory overhead. Now this is where everything that's not direct materials and direct labor is going to be go to. So what do I have here? I have indirect labor, 47,000. What else do I have? I have repairs for the factory equipment. So repairs, factory equipment, and that is how much? $23,000. Then what else do I have here? Rent cost of the factory building. So I'm going to add in my rent cost of factory building. And that was how much? $57,000. As I see right there. What other overhead do I have? That is, let's see, selling expenses, that's an administrative expense. That's a period expense. This is a period expense. And we accounted for all those. Okay. So my total factory overhead is going to be the total of all my different costs associated with factory overhead. So let's go ahead and add that together. $47,000 plus $23,000 plus $57,000. And that should give me a total of $127,000. So I'm going to put that right here. So those were all my manufacturing costs incurred. Now remember that the cost of goods manufactured, if you watch the uh, 2 instructional videos with this is really just an analysis in a report form of the work in process account, the T account or the ledger account. So keeping that in mind, what do I remember? I remember that my overhead costs incurred, plus I have to add in my work in process from the beginning of the period. Work in process, inventory, beginning was what? $53,900. So that'll give me total manufacturing costs incurred of how much? Well, let me take a look here. 127,000 plus 53,000. I think they'll 53,900. So 127 plus 53,900. And that's going to give me a total of okay. You know what I did here? Back up just 1 second here. Let's just back up 1 second. Let me insert a row here because what I didn't do, dummy me, is I didn't add up all my manufacturing costs. So total manufacturing costs. And that was how much? 169,900 plus 225,000 plus 127,000. And my total manufacturing cost that I added this period is 521,900. Now I'm going to take that total cost incurred, not just my factory overhead, which I goofed. My total manufacturing costs incurred 521,900. Add that to my beginning work in process inventory, and I should have the right amount here, $575,800. So this would be my total, actually, cost of work in process. So this is the total amount of debits, if I want to look at it from a T account perspective. The total amount that's been charged to work in process. Now, from that, I'm going to subtract out my work in process inventory at the end of the period to calculate my cost of goods manufactured. So what is my ending balance? 41,500. So work in process inventory ending 41,500, and that will give me my cost of goods manufactured in the period. And when I do this, minus my ending balance, 41,500, that should give me a total cost of goods manufactured of $534,300. Whoops. And then in good form, I will put 2 lines underneath that to mark it as a final number. That is my final number. Now, and if I want to be a perfectionist, I'll put my dollar signs here. Okay. Now, why did I put all of these here in one column here and then put the total on the left? Because these are just different amounts that we're subtotaling and then putting it in here when we get the final number. Okay, so let's go on to the next exercise here. And this will be a continuation of this Delray manufacturing. Now it says use the following selected account balances of Delray manufacturing to prepare a schedule of cost of goods manufactured for the end of the year. So the income statement is going to be comprised of what? The sales minus the cost of goods sold. The cost of goods sold is an analysis of the finished goods account. So I'm going to do here, and I'm going to go back here real quick, and I'm just going to snip this. And let me just do a little snip right here. And I'll put that over here. So that way I have it whenever I need it. Okay, so when I do an income statement, what's the first thing I do? I list the sales, right? Income statement, if we remember, is simply revenues minus expenses. That's the very basic, simplest way to call the income statement, to figure out the income statement, or sometimes it's called a P&L statement, profit and loss statement. So I'm going to list my sales here, and we're told that sales were what? 1,250,000. Okay. And let me format all this. Okay. And okay. So now we have cost of goods sold. Sales minus cost of goods sold. So how do we compute that? Well, we're not given the cost of goods sold here directly, but we can figure it out. Why? Because if I analyze my finished goods account, my finished goods inventory account, I can take my beginning finished goods inventory plus my cost of goods manufactured to give me my cost of goods available for sale. subtract out my ending balance in finished goods inventory, which is right here, and then that can give me my cost of goods sold. Now I only have the finished goods inventory beginning balance here and here, but remember I have my cost of goods sold, which I just calculated as being here. So let's go ahead and cost of goods sold, finished goods inventory, beginning 62,700 plus my cost of goods manufactured, which was how much? Oops. $534,300. So $534,300 will give me what? My goods available for sale. And that will be my cost of goods manufactured plus my beginning inventory of 62,000 of finished goods, 62,700. And I should have goods available for sale of $597,000. From that, I'll subtract out my ending finished goods inventory. So less finished goods inventory ending. And that was how much? Let's go back up here because I just covered it all up. 67,300. So 67,300. And so my cost of goods sold is how much? Let me see here. So $597,000 minus 67,300. So my cost of goods sold is 529,700. So if you remember, sales minus cost of goods sold gives me my gross profit. So gross profit is how much? Let's calculate this. 1250 700, and that gives me gross profit of $720,300. So now, are we done? No, because we have to subtract our operating expenses, our day-to-day expenses not associated with production. So what do I have here? I have selling expenses and general and administrative expenses. So we'll put selling expenses, 94,000 we're going to subtract out, and then general and administrative expenses of $129,300. So some more expenses we need to account for. So when I take my gross profit and subtract out my 94,000 and subtract out my 129,300, that leaves me with net income of $497,000. So net income of $497,000. And let me just finish this, put the two lines underneath of it to show that it's a final number. And so that is my income statement. So that is exercise 1413, calculating the cost of goods manufactured, which then we translated and transferred to the income statement right up here. And then we were able to take our sales minus our cost of goods sold to get our gross profit, minus our selling expenses, and minus our general and administrative expenses to get our net income. So this is Leroy Meadows. Have a good day.